solved some previous class question or from your book if you have?
No, sir. I
You can,
tried today.
okay, but you are not able to solve it.
No, I didn't try today.
Okay, you didn't try.
Yeah.
Ritika.
So I tried the question, the homework question which you gave in the class and the last.
The question we have done in the class.
No, sir. At the end of the class, you gave a question as homework.
Yes.
So that question I tried.
So you tried and you able to solve it or not?
Yes, sir. I was able to do it.
Okay, so there is no problem in that question.
Yes, sir.
Yes or no?
Yes, sir. There is no problem.
I'm asking. Okay. Okay, so let's start a new topic today. Actually, Fahim, you have to solve some question because if you do not solve question at your own, then you will not be able to understand the question, the concept.
Yes, sir. Okay.
You have to practice some question.
Okay.
Okay, actually, if you won't have any book right now with you, then you can download the question. You can easily find the question as you have found the answer of the question. So you can easily find the question also.
Okay, sir.
Okay. So let's start our today's topic. I told you that we will do issue of share for consideration other than cash. So issue of share for consideration other than cash. Okay, so issue of share for consideration other than cash, what does it mean? First of all, a company can issue its share by two methods, or you can say they can receive money in two forms. Okay. So the first consideration is cash, and the second consideration is other things that we need, but we are not able to pay the money in cash, then we issue our share to them. So there may be different type of situation, like we have purchased a fixed assets. Purchase of fixed assets. And there may be different reason that we are not able to pay money in cash. Okay. So we issue our share to the seller of the fixed assets. Purchase of a business. Purchase of a business. Now, in the same manner, when we buy a business, all the assets and liabilities of any business and their operation also. So in that case, we also issue our share for cash, or we can issue our share along with cash payment. Okay, there may be different combination for payment, so we can do this. Okay.
Okay, sir.
Okay, sir.
Okay. Now, the third option we have, actually, these are the things we have bought, purchased. Now, sometime we receive a service from someone, and in the return, we give them our share, our company's share. So service like we issue our share to promoters. we issue our share to underwriters. Okay.
Okay, sir.
Okay. Now,
Yes, sir.
you know these two words.
Yes, I know about the promoter.
Ritika,
Yes, sir, I know.
both of them, promoter and underwriter.
Yes, sir.
Okay. What about Fahim? Underwriter. You understand underwriter means?
No, sir. I just don't remember.
Okay. Okay. Let me explain these things. Okay. First of all, let's start with first one here. First case. Purchase of fixed assets. Okay. Now, when you write the theoretical part, you will, let me write it here. Purchase of fixed assets. Okay, now we are purchasing fixed assets. Can you tell me the journal entry if we purchase an asset?
Asset account debit to cash account.
Okay, fine. What will be the entry if we purchase assets on credit?
Sir, assets account debited to cash or bank account?
If we purchase it on credit?
No, no. For credit, uh, loans account would be
Okay, Ritika.
Sir, is it cash, sorry, asset account debit to the seller's account?
Yes, assets account debit to creditors, you can see.
Yes, sir.
Okay, so the first journal entry in this case for purchase of fixed assets. This is the narration for purchase of fixed assets. Entry will be assets account debit, because if we pay full amount in cash, then there is no need to issue our share. Yes.
Yes, sir.
So for purchase of fixed assets, we have purchased our fixed assets, so it is debited, fixed assets account debit. The name of assets, if it is given in the quotient, then you will write the name of assets. Like if it is given machinery, then you will write machinery account debit. If it is building, then you will write building account debit, like this. Okay.
Okay,
okay,
sir.
sir.
Okay. So fixed assets account debit to creditors or vendor account. Vendor means seller. Okay.
Yes, sir.
Okay, sir.
So this is our entry when we purchase fixed assets on credit basis. Now, if we have purchased it on credit basis, now we have to issue share to them. So for issue of share to vendor. Now, in this case, there is no application, no allotment, no first call, no final call, because all the money we have already received in form of fixed assets. Yes.
Yes,
Yes,
sir.
sir.
Okay. So if we have already received the money, then there is no need for lump sum payment or installment. So that's why we will not write application, allotment, first call, final call, because we have received the money. Now we are allotting our share. So creditors or vendor account debit to share capital. If it is equity, then equity share capital. If it is preference, then preferential. That's it. So this is the journal entry for the first case. Okay, is this clear?
Yes, sir.
Yes, sir.
This is very simple. Actually, there is no problem here. So let's discuss the second concept. Case two. When we case of a business. In this case, not using one asset group of assets.
So your
So-
voice is breaking.
Yes, is it audible now?
Yes, sir.
Yes, sir.
Okay. Okay. So what I'm saying, yes. Now, in purchase of a business, we don't purchase a single asset or a group of assets. We take assets as well as liabilities of that business also.
Okay, sir.
Now, tell me, if you take someone liability, then what we have to do in that case? What will be the journal entry if we take liability for some consideration?
So it will be credited.
Yes. We are taking someone liability. So what will be the journal entry? Okay, you don't know?
No, sir.
Ritika.
No, sir.
Okay. So same as we have taken the assets, the entry was assets account debit to creditors. Yes.
Yes, sir.
Yes.
But here in this case, this is business. So we cannot write creditors. We will write vendor. Okay. So the entry should be vendor account debit to liabilities. Yes or no?
Yes.
So
Yes,
when,
sir.
when we have taken assets, assets is debited in the journal entry and vendor is credited. But now we are taking liabilities. So liability increase on the credit side. That's why liability is credited here. Okay.
Okay, sir.
Okay, sir.
Now, if we also, actually, I told you already that in purchase of a business, we take assets as well as liabilities. So we are taking assets also. So there will be a separate entry like this, assets account debit to vendor account. Now let's say total assets value of that company is 5 lakh. So 5 lakh here, and total liabilities value is 2 lakh. So 2 lakh here. Okay.
Okay, sir.
Now, if we combine these two entries, can you tell me what will be the journal entry? If we combine, when we combine two entry, what we have to do?
Yes, sir.
Okay, so tell me.
The assets account debit to liabilities account.
Assets account debit to liabilities. Actually, I'm leaving the space. If there is any incorrect Then I will add this. Okay, liabilities. Okay, and
Two vendors account.
two vendors account. Okay, two vendors account. Amount.
So assets will be 5 lakh.
Okay,
Liabilities will be 2 lakh.
2 lakh.
So will the vendors be 3 lakh?
3 lakh. Okay. So this is correct entry. Yes. Fahim,
Yes, sir.
you understood this part?
Yes.
Actually, what we have done, vendor on the debit side, vendor on the credit side is given here. So we have deducted the amount to 5 lakh minus 2 lakh, 3 lakh on the credit side. Yes.
Yes.
And asset is debited, liability is credited here.
Yes, sir. Just like we have reduced the vendors one.
Yes, yes. We have
5 lakh
combined the
minus
entry
2
and reduced the amount of vendor.
Yeah.
Okay. If actually in this type of portion, if a vendor is debited and credited with the same amount, like on the debit side, this is also 5 lakh, then it will be removed because there is no balance left in vendor. Yes.
Yes.
Yes, sir.
And if the vendor is on the same side in both the entry, like in here credit side, here credit side 5 lakh, 2 lakh, then vendor amount will be added. It will be 7 lakh. Okay.
Okay, sir.
Sir.
So this is the rule of combined entry. Okay. So now we are taking assets, liabilities, and for purchase of business. For purchase of business. Actually, one more thing I have to add here. There is one thing left. Now, in this question, if you can see here, we have written 5 lakh as assets and 2 liabilities to 2 lakh. The vendor amount is 3 lakh. Yes.
Yes.
Yes, sir.
Now, what if question tell you that we have to pay 3 lakh, not 3 lakh, we have to pay 4 lakh to the vendor. We have to pay
4 lakh to the vendor.
4 lakh to the vendor. In that case, what will happen here? What will change here? This is very important. Don't know.
Sir, which amount would change to 4 lakhs?
Okay. This vendor amount will change 4 lakh
Okay.
because this vendor is liability for us. We have taken 5 lakh worth assets from him and taken 2 lakh worth liabilities from him. So we have to pay 3 lakh here. But if portion say that we have to pay him 4 lakh, then we have to write here 4 lakh. Okay.
Yes.
And there will be some changes here also. Let me write it. So vendor account will be 4 lakh.
Yes.
Now tell me why someone will pay extra money to some other person. Why?
Interest.
Interest.
Yeah.
Interest is generally attached to loan. Yes, related to loan.
Yes.
Is there any loan here?
No, sir.
So there will be no interest.
Okay.
Okay. So just actually, you don't know the answer actually here, but you have to you can say estimate. You have to assume that
Like
something will.
the appreciation of the asset.
No, there is no information about appreciation. So no, there is no appreciation.
Oh, okay.
Yes, like this, you can think about more things. Okay, let me clear once more it to you. Let's say I am the seller of the business, okay, and you are the buyer. Okay,
Okay,
Okay.
sir.
and you are a knowledgeable buyer, not a random buyer. You are a knowledgeable buyer. You have knowledge of the market. You have knowledge of the business, and you know the estimated price of the business. So I'm telling you that I will sell you my business for 4 lakh. Okay, and you know that the assets and liabilities difference is only 3 lakh. Okay, so why you will pay 4 lakh to me? Think about it.
Goodwill.
So premium.
Yes, it is goodwill.
Goodwill. Okay.
Ritika, you said premium. Premium for goodwill, you mean, or security premium?
Security premium.
Okay, security premium is always attached to issue of equity share. We have not issued any share here right now.
Yes, sir.
Okay, so it is goodwill because business is not about only assets and liabilities. Yes,
Yes.
if I
Yes,
am
sir.
running a business, then it means it has some impact on the people around here.
Yes, sir.
Yes. So we have some name in the market, and that's worth something. That's why we are ready to pay extra money to the vendor. Okay.
Okay, sir.
So that's why this is called goodwill. And here it will also become goodwill. Okay.
Okay, sir.
Okay, sir.
So actually, you don't have to pass this entry. We have written this for understanding purpose only. This is the main entry we have. Is this clear?
Yes, sir.
Yes, sir.
Okay. Okay, so for purchase of business, we will write assets account debit. Goodwill account debit. To liabilities account. To vendor account. And to capital reserve account. Now, why we have written capital reserve on the credit side? So, same as the goodwill, if we are paying the higher price, then it is goodwill. But sometimes we can also pay the lower price, means the net asset is 3 lakh, but we have told the company that we'll pay only 2,50,000.
Okay,
Yes.
sir.
Okay. Now, in that case, this is profit for the buyer. Yes or no?
Yes, sir.
Yes, sir.
If we have paid extra money, extra 1 lakh, this is called goodwill. But now we are paying less money to the seller, 50,000 less. So this is capital nature profit for us. That's why this will be transferred to capital reserve account. Okay.
Okay, sir.
Okay, sir.
So goodwill and capital reserve is balancing figure. It is balancing figure. And purchase consideration for buyer, and the value of assets and liabilities will be written. So this is our journal entry for purchase of business. Now we will issue share to the vendor. Issue of share to vendor. So it will be vendor account debit to share capital account. To share capital account. Okay.
Okay, sir.
So please write these entries and the concept. After that, we'll solve a question. Okay.
Okay, sir.
Thank you, sir.
Done.
So I'm done.
Okay, Fahim.
Yes, sir. It's done.
Okay, so now let's discuss a question. Okay, you can see the question.
Yes, sir.
Yes, sir.
Okay, so okay, there is one more thing actually here. Security premium. If we issue our share on premium, then this entry, the second entry will change. Vendor account debit to share capital to security premium rate.
Okay, sir.
Okay, so question number 29. Rajan Limited purchased assets from, actually, let me share this question with you because this will be your homework also, this PDF. Share. Okay, so you will receive in some time. It is uploading. Okay, now the question. So Rajan Limited purchased assets from Geeta and Company for 5 lakh. A sum of rupees 1 lakh was paid by means of bank draft, and for the balance due, Rajan Limited issued equity share of rupees 10 each at a premium of 25%. Journalize the above transaction in the books of company. Now, total asset we have purchased 29, sorry. So now the solution. We have to pass journal entry. So there will be some calculation first. Working note number 1. Purchase of assets. The value of asset, can you tell me? It is 5 lakh. Yes.
Yes, sir.
Now we have already paid bank draft of 1 lakh. So the balance amount is 4 lakh. Balance amount payable 4 lakh. Okay.
Okay, sir.
Yes, sir.
And this 4 lakh will be paid in rupees 10 share, which is issued at a premium of 25%. Okay. So balance
Yes.
amount payable is 4 lakh. The issue price of share is 25% premium. So 10 plus 10 into 25 by 100. This is how we calculate the issue price. So it will be 12.5. Okay. Now number of share.
Sir, the number of shares are 32,000 shares.
How 32,000 share?
Uh, we'll take that, we'll apply the formula, which is like 4 lakh divided by 10 plus 2.5, 12.5.
Okay. So it will be 32 lakh,
Wait, sir, wait. I'll calculate again.
32,000. Yes, I think so. Yes, it will be 32.
Yes, yes, sir.
Okay, so number of share will be 4 lakh divided by 32.5. Oh, sorry, 12.5.
Yeah. So 4 lakh divided by 12.5.
So it will be 32,000. 32,000 shares or equity shares. Now, 32,000 is equity shares, so 30,000 into 10 and 32,000 into 2.5. We have to calculate this separately. First one is share capital, the second one is security premium. So 3,20,000 is our share capital
Share
and
capital
80,000 is our
is the premium,
premium.
securities premium.
Now the journal entry. So first
Okay.
journal entry will be
Assets account debited to Geeta and company account.
very good. Assets we have purchased at 5 lakh. So assets
Yeah,
account
so
debit
both the amounts would be 5 lakhs. Debit and
to
credit.
Geeta and company. But we have also given a bank draft.
So sir, in the same entry would pass that.
Yes, you tell me that bank draft will be written in first or second entry.
Second entry, sir.
Ritika,
So second entry only.
but we can write it here also.
Combined entry. Okay.
Actually, the bank draft given can be written in both the entries
Okay.
because it is not given that bank draft is paid at the time of purchase or letter.
Yeah.
Yes. So equity share
Yes.
is issued. We can pay bank draft at the time of issue of equity share, or we can pay bank draft at the time of purchase itself. So assets
Okay,
account
sir.
debit to and company 4 lakh and to bank account 1 lakh. Now we are issuing share to Geeta and company. So Geeta and company account debit to share
Uh,
capital.
to shares capital and to securities premium account.
Yes, to security premium or securities premium reserve account.
Okay.
So 4 lakh Geeta and company, 3,20,000 share capital, and 80,000 security premium. Now the narration, it will be being assets purchased from Geeta and company and issued bank draft. Draft of rupees 1 lakh, you can also write. And the second entry is being issue of equity share at premium for balance amount. Okay.
Okay, sir.
Yes, sir.
So this is your solution for question 29. Is there any doubt you have in this question?
No, sir.
Okay. You have written or taken a screenshot of this question?
Yes, sir.
So could you show the second entry?
Yes.
Yes, sir. Done.
Okay. So this is purchase of assets, our first case. Now the second case. Second case, in second case, we have purchased business of some company. So, here. Okay. So limited purchase. Yes, question number 36. You can see the question now.
Yes, sir.
Yes, sir.
Okay. So Shard Limited purchased a running business from Messrs. Rai Brothers for a sum of rupees 15 lakh. Now, the purchase consideration is given in the portion, means at which price we have purchased the business. Okay.
Okay, sir.
Thank you, sir.
So we have purchased business at rupees 15 lakh, which is payable in 12 lakh in fully paid shares of rupees 10 each and balance through check. So 3 lakh is paid by check and 12 lakh is by issue of equity shares. Okay.
Okay,
Okay,
sir.
sir.
Now, assets and liabilities consisted of the following. There is plant and machinery, building, debtors, stock, cash, sundry creditors. There is liability, sundry creditors, and all other are assets. Now, in this question, if we pass the journal entry, first of all, we have to write all the assets.
Yes.
So it is plant and machinery account debit.
4 lakhs. And then building account 4 lakhs debit.
Building account debit.
Then
Then
sundry debtors,
sundry
3 lakhs.
after
Then
that cash.
stock account. Stock is 4 lakhs. Cash 3 lakhs.
After that, there is one liability, sundry creditors. And total amount payable to vendor is 15 lakh. So 15 lakh here. 2 lakh for sundry creditors. Cash is 3 lakh. 4 lakh is the stock. After that, 443. Now, we have taken assets of how much amount? Total
So,
value of
18
assets
lakh.
taken over.
18 lakhs.
18 lakhs. Okay. And liabilities taken over?
2 lakhs.
2 lakhs, sundry creditors.
Yeah.
Okay. So how much amount we should pay to the company?
Two
How
lakhs
much
only,
amount
sir.
we pay to the company, the difference between assets and liabilities generally, if it is not given?
Okay, sir. So 16 lakhs.
So amount should be paid to the vendor is 16 lakh, but in actual we are paying only
15.
15 lakh.
15 lakh. So there is 1 lakh less payment. Yes.
Yes, sir.
Yeah, sir. So it would go to the reserve account.
Yes. It will be capital reserve. So
Yeah,
you can
capital
write it
reserve.
here or here to capital reserve. 1 lakh. Now both side is equal. 18 lakh on the debit side, 18 lakh on the credit side. Is this clear?
Yes, sir.
Yes, sir.
Now we have to pay to the vendor amount. So vendor account debit to we have paid check. So to bank account and to share capital. There is no security premium, so only share capital. Okay.
Okay, sir.
Total
Okay, sir.
amount payable is 15 lakh and we have paid 3 lakh by check. Balance 12 lakh is through issue of share. So this is your second portion.
Okay, sir.
Okay. So portion number 36 and 29 I have solved here. Now the balance portion, actually you will get this portion in serial number 1, 2, 3, 4. So see the portion. I think you will remember the portion when you are trying to solve. So leave these two portions and solve all other questions. Okay.
Okay, sir.
Okay. Now there is two concepts left for this topic. Issue of share for consideration other than cash. One is promoter. So I'm explaining the promoter concept actually. When a business is started, okay, so the person who incorporates the company or who helps in incorporation of the company, they are actual owner of the company, okay, but here they are called promoters, okay.
Okay, sir.
And for their service that they have given at the time of incorporation, for their service they get some number of shares from the company, okay, and that is called incorporation expenses. Because if we are paying share capital in and we are not getting anything in return, then that is not a transaction, it is just as a gift. Yes.
Yes.
Yes, sir.
Transaction means if we are getting something and then we are paying something. Yes.
Yes, sir.
Yes, sir.
So promoter do the service for the company, they help in incorporation, and in return they get share capital from the company. So their service expenses is called incorporation expenses, and in return of their service we give them shares. So that is treated as incorporation expenses. Is that clear?
Yes, sir.
Yes, sir.
Okay. Now, the second concept, underwriters. Now, who are underwriters? I told you about minimum subscription concept. Means when a company issue its shares, he need at least, sorry, not he, they need at least 90% of the shares issued. Yes,
Yes,
as
sir.
application. So if they will not receive 90% application, then the issue will be cancelled and company has to refund the money to the shareholders. Yes.
Yes, sir.
Okay. So sometime what company do? Company take the help of underwriters, a person who will purchase all the share in the IPO if it is not purchased or bought by the shareholders. So the underwriter will purchase all the share. So by this means the issue will be successful because all the share will be purchased. 90% subscription criteria is fulfilled. So issue will be successful. And after that,